Hello, everyone. Good to be here. My name is Motti, and I'm the founder and CEO of ReBlonde. We are a PR agency representing over 50 crypto and blockchain projects. A few of them are here on stage with me. So we will start by introducing all the panelists, and we'll go over some general questions. And then maybe, perhaps with some luck, we'll have some extra time for questions from the crowd. So go ahead, introduce yourself.
So I'm Modinos. I'm the founder of Blockready. We are a pure educational company. That's all we do. We try to educate everyone who is a newcomer to the space. We want to make sure that they onboard as fast as possible. We try to make sure that they navigate the space as safely as possible. We don't do anything else. We really focus on education. We don't have our own cryptocurrency coin. We're not an exchange. We don't really build on the blockchain because we really want to really kind of land our mission. And our mission is really to protect and onboard people onto this industry, which is, I know it's going to be a revolution for the next years to come. So we come with a micro-learning approach. We want to educate people with bite-sized, easy-to-digest information and bring them on board across all the different sort of industry topics, such as blockchain, mining, NFTs, DeFi, cryptocurrency exchanges, wallets, and so forth. That's what.
Fantastic. We all know that education and infrastructure are the foundation for every success. Go ahead, Josh.
Yeah, thank you. My name is Joshua. I'm the head of DeFi BD for Spool DAO, which is the decentralized entity associated with Spool Finance. Spool Finance is an Ethereum mainnet DeFi protocol. It's a decentralized and permissionless toolbox that allows anybody to create a risk-adjusted, auto-compounding, and auto-readjusting DeFi smart vault, almost like an ETF for a vault. But instead of assets, you're listing yield strategies. Instead of holding assets, you're allocating a single deposit to multiple diversified yield strategies within DeFi.
Thank you. Z?
Thank you. Hi, I'm Z. I'm founder and CEO of Carbon Credit Technology. We are building a technology platform to connect carbon asset owner to the consumers. That's what we try to achieve, and we hope through blockchain technology, through smart contract, we can make our own contributions to make the world a more sustainable and to make the world a greener place. So that's it for us.
Thank you. Alexander.
Thank you. My name is Alexander Tkachenko. I'm founder and CEO of VNX. VNX is the first platform in Europe that got regulatory approval to launch tokenization of the precious metals. And VNX Gold is the first token that we've issued this year. And more is to come. We're multi-chain, already available on Ethereum and Q, and are working to bring the product on 2 more chains by the end of the first quarter next year.
Thank you. Jerry.
Hello, everyone. Jerry Lopez here, CEO and founder of Philcoin. Our focus has been built on creating the first philanthropic movement in the blockchain through an app where we incubate products and services like education. We have soft skills training, accredited education outside of the United States that we give for free on the app, as well as gaming, as well as being social, streaming, podcasting, all in one place that allows the average user to be able to earn while they do it. Kind of like all together one place, one-stop shop where people can actually earn while we're giving back, creating peer-to-peer philanthropists. Since we know for many years, for 300 years, philanthropy has been considered more of a charitable, an NGO, anything that has to do with major organizations. We're bringing peer-to-peer to the average person so they can make an extra living through an app.
Thank you so much. So we'll start with the first question. Stay with you and go all the way back to Buzz. The causes of the current bear market are widely discussed, especially in light of the FTX implosion. How do we pick up the pieces and move forward from here?
Well, that's a great question. You know, my whole take on the bear market is that, particularly in this season, this is more of a purge market for me. You know, I've been in this space since 2015, so I've had a few crypto winners, but the fact that we're starting to see that all the older institutions that have been around for a while, they're being purged out because Simply, a lot of them have not had the greatest of intentions to really building a decentralized ecosystem to really help people. Because the truth of the matter is, if we go back to 2009, the whole philosophy of Bitcoin was to really change lives through decentralization. So as you see a lot of people that were extremely intelligent early on, creating, all of these great ecosystems, a lot of people were taken advantage of. And I think this is just a purge where the right people with the right projects, with the right utilities, with the right purpose to really want to make change are starting to rise now.
Thank you. Alexander, same question. I mean, listen, if Satoshi Nakamoto and Hal Finney would see what's happening right now in the crypto sector, they would be rolling in the grave. How do we move on forward from here?
In my view, the blockchain industry, which is much bigger than crypto, has reached a tipping point. I don't think that Satoshi Nakamoto really saw what would come out from his invention. Probably like the people who started the first internet transactions were not intending to see what's happening to do now. So the industry has grown too big and too important. Potentially it will be much bigger and much more important. In my view, it's the third revolution that we see: mobile, internet, and the blockchain. And I think now it's the time for the regulators to move in and to start to bring more clarity, higher barriers to enter to protect the industry, but also start to see that there's certain levels, like stablecoins, and again, I'm here from this angle, infrastructure, and you protect the infrastructure, or you build the infrastructure first, and then it has to be very well protected. So in my view, this is the time when the regulators come on.
Regulations.
Not too much, because it stifles the innovation, but for the infrastructure, it's a must.
All right. Z. Same question.
Okay. Well, I agree with Alex and Jerry. What they mentioned. I think regulation is very important to take us out of this. I was in a banks conference yesterday in London, and then just want to give a different perspective about what we're going through. It has been a painful week for anyone who is involved with crypto in the last, I would say, 10 days. But I was yesterday doing a panel, which is Swiss National Bank and Bank of England were on the panel, and the previous chairman of CFTC. So it was a conference organized by Goldman Sachs. So the Goldman guys, what he mentioned was, you know what? During the last 10 days, we have so many calls from the traditional hedge funds calling us to set up a relationship, to start trading crypto, because they see an opportunity here. But by the end of the day, they can, using their word, they can smell blood, but they can also smell the value. So I think we can focus on, of course, what happened. We have to learn from that. But there is always back actors, not only on crypto, not only on centralized exchange. If you think about earlier this year, I don't know how many of you in the traditional finance side will remember Oculus, which is a family office in US, and they had a huge leverage bet and then create a market crash. So it happens on crypto and non-crypto. By the end, back actors are there. But after all, how can we rebuild from here is quite important. And as Alex mentioned, I think regulations plays an important role. But also as us, I think if we can keep a high standard to ourselves, I think that's also equally important.
Thank you so much. Josh.
Yeah, so I want to agree openly with what my friends here said about regulation, but I do also want to put forward a statement that we should be very careful with how much we vie for regulation and how much we ask regulators to do in the DeFi space, in particular the DeFi space. As part of Spool DAO, I'm a bit of a decentralization maximalist. I think that the regulators, whilst they are going to protect consumers, will serve to stunt the innovation, especially the liberating innovation, the decentralized innovation of the space. We do need regulation to allow that next inflow of capital. The capital is essentially what gives us yield in DeFi. Generally, liquidity equals yield. The more liquidity, the more yield, therefore, the more attractive the DeFi. But there is a fine balance, I think, to be had with allowing regulators to control this space, especially the permissionlessness of DeFi. Having access without anyone allowing you to have access, that's an absolutely essential part of the DeFi space. regulators are likely to put all access points for the regular investor behind KYC, behind AML verified layers. This is ongoing. I was also at a conference a few weeks ago and saw many of the projects, I'd say half of the projects on show were KYC, AML for DeFi. So whilst it is an inevitability, I think we should also be very careful about how much we encourage this blanket regulation of the space. For me, DeFi should be communicated as an empowering, liberating technology, not just something to earn good money, because that's kind of why DeFi was created.
Fantastic. Yeah, same question.
Yeah, I mean, even if we're going through a very difficult bear market right now, I think there's still reasons to be optimistic that all this pain we're going through right now will actually be worthwhile in the long run. I mean, we're going through what we call a cryptocurrency catharsis, right? Where all the projects that don't have the fundamentals, the projects that don't have that structure to survive that bear market will eventually die. And the projects that have a real world case scenario, they solve real problems, they have the backing of the investors, and they have a strong community behind them, they will obviously survive that bear market. Also, we're looking at this huge news about these big cryptocurrency exchanges and the crypto-related financial companies that they're, going into bankruptcy, and that gives us one more serious reason to understand why decentralization and transparency is so important in this space. The kind of transparency that potentially proof of reserves gives us, right? Unfortunately, these companies, and unfortunately for us also as investors, these companies didn't abide by these values we all regard as the most important in this space. Their business model was completely different, and this is something that we all need to learn from and take that in consideration in the future for this industry to flourish.
Thank you, and of course we will survive this bear. So Jared, back to you. Moving on. Which traditional industries are going to be disrupted mostly by blockchain and crypto, and why? Well, let's pick, each panelist will pick one industry that he thinks that will be most disrupted.
I think the act to earn model is important. There's 8 billion people on the planet. And as we know, giving back and changing the way giving happens, it's important. There's just something about giving that really, inspires a person to feel better.
Are you referring to charity?
Yeah, everything that has to do with philanthropy and giving back.
Okay.
If you look at the beginning of Bitcoin, none of us would have been here if it wasn't for a group of gamers starting giving Bitcoin away in their CPUs, mining them, trying to create traction so everyone that read that white paper built something great out of it. So all of us are part of that, a part of that initial giving that happened with those initial gamers and miners. So we're right now having all these great, amazing conferences because someone stepped up to try to make a difference. And decentralization in the blockchain, as well as giving back, I believe is going to be key because there are more less fortunate people on this planet than there are people that are wealthy. So if we can grab the average family, for example, in a place like India or Africa or Latin America, that they make an average income of $200 or $300 a month, and you're giving them tools to get educated, to be able to gamify themselves, to be able to be in metaverses and all that stuff, and they have the opportunity to earn something while they're doing it, and all of that in one place, we will be disrupting not only the space, but we will be educating the people along the way because it's one of the biggest gaps that we're having. Education on blockchain has the reason why a lot of people have been disrupted by the space. So I believe that the act to earn, donate to earn, philanthropy model of everyone coming together to give back will be a pace setter this season where there's been so much disruption.
Fantastic. Alexander.
In my view, blockchain will do to physical assets what the financial industry did to financial instruments. It will bring velocity. So as soon as you have dual representation, you have a physical asset and then the representation of it, which can change hands, increase in value, etc., it brings velocity to the market.
So commodities, real estate,
You name it, table, this bottle of water, my t-shirt if I become famous, or your jacket because you're already famous. Everything becomes movable. Velocity brings a lot of money, a lot of interest, a possibility to trade. Your jacket may be interesting to someone in Indonesia, and he would be willing to pay 5,000 for it. Okay, you send him the NFT, and he has a right to claim.
Probably a little bit oversized on. Yeah.
Maybe. But that actually, in my view, is a fundamental change that the blockchain will bring to the world.
Interesting. Z, which industries?
I would say environmental sustainability. So if you think about how many of you travel from, let's say, anywhere come to Malta for the conference, if you book your flight ticket, I would say most of you will see an option. Would you like to offset your carbon footprint? So, and now if you go on Google, you can easily see, you can sort the flight, Google flight, by how much CO2 emission you are emitting when you took the flight, when you travel. So clearly, ESG has been a hot investment theme in the last few years, concretely, but how can we leverage blockchain to make this journey more, let's say, there's more accountability. Right. We actually know when we donate money, when we offset, where does this money go? Does it actually go to plant trees? Does it actually go to conserve the forestry? Or does it, what kind of good we bring in? And I do think blockchain has, not only crypto, but blockchain as a whole is part of these technology solutions to this environmental journey we are going on.
I 100% agree. Josh?
So I think that one of the biggest impacts that blockchain will have is on business models and financialization of different types of business. If you can imagine that right now you have a small and medium enterprise, and how do they finance themselves? Well, they go to a bank and they ask for a loan, or they have a friend and family who gives them a loan. Imagine if you could do this, but without asking a bank for permission, you could have some kind of collateral, i.e. your tokenized real estate, as we just mentioned. Your office space could be put up as collateral. You can pull up a loan against that office space and use it to finance your early stage startup. Further than that, something like tokenization can be put to use in all walks of business life, not just tokenizing your bottles of water or tokenizing your product, but tokenizing your supply chain, increasing efficiencies, making it all transparent through the blockchain so that your shareholders can get a better view, and even tokenizing your shares gives you much more flexibility than just sort of dividends through shareholders and then putting them onto the board. The token itself is much more flexible. You can have staking of this token to provide governance access. You can have revenue share through this token itself. So generally, business models are going to become much more efficient and much more in-house because you can do pretty much all of your business activities using the blockchain by yourself.
That's a no-brainer, actually. Thank you. Buzz?
Yeah, in my opinion, definitely one of the industries that will be disrupted and is already being disrupted is the gaming industry, right? The gaming industry has been seeing exponential growth the last couple of years. They are now regarded to be a competitive sport. They have their own competitions, their own prize awards and cash prizes, and their own black market. So the gamers right now will leverage blockchain to have a more fair play, be able to transact more reliable whatever artifacts they have in the game, as well as the specific tokens that represent value. They will be able to obviously take those artifacts, such as a unique game character that they perhaps built, and actually even use it across multiple digital worlds, which is immense. And of course, it's the reliability that you can actually have that decentralization, where you know that whatever you've built, whatever you accumulated through these gaming environments belongs to you, and it's actually verifiable and can be reliably transacted through the blockchain.
Thank you so much. So, as this panel comes to a close, I will continue a years-long tradition that I have when I'm moderating panels. I will ask the panelists for their projection for a specific asset, and then we will pull up the records of this panel in a year from now and see who was right and who's wrong. So Jerry, we will start with you. What will be the price of Bitcoin on December 31st, 2023? Go ahead.
I will say that will be the beginning of the bull market. I think that this upcoming year is going to be good, so I would say 75.
I'm buying that. Alexander.
I would say 20.
20. Z.
25.
25. Josh.
Yeah, 35.
Oh, a bull here. Yes, Buzz.
Yeah, I'm not that optimistic for the short term. I think within a year we'll still be in a bear market, so I would say around 20, 25, yeah.
Ouch. I'll go with 50. Thank you so much, everyone. Thank you for coming.